All right, good afternoon, everyone. Today is December 21st, 2012. Friday, December 21st, 2012. Let's go over the results first from the live trading room. We took a couple trades on gold, a win and a loss, actually two wins and a loss, and we ended up break even on the gold. We traded crude, we're up 24 ticks on crude, and the Russell, we're up 15 ticks on the Russell. We did have an open house this morning, which I think went pretty well. We answered a ton of questions. Showed a whole bunch of stuff on the charts. I wish we would have recorded it, but we didn't. But anyway, we showed a whole bunch of stuff on the charts. It was all good stuff, and we showed how to profit from the markets and how to do it on multiple markets, how to do it on a whole bunch of different markets we traded this morning. Well, we showed it anyway. If you have not taken the free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. All we ask for is your name and your email address. With that, you'll get everything you see here, all the charts, data feeds, everything that you see here for 5 business days. You'll also get to sit in on our live trading room with us for 5 business days, and you may be able to pick up the whole thing during that 5 business days. And by the end of it all, if you decide to become a partner with us and continue on, you might be able to start trading profitably right away. Maybe not. Maybe it'll take you a little longer to learn it, but either way, we're there for you to help you walk through that journey. All right, I went over the results already, right? We're up 24 ticks crude, up 15 ticks Russell. The total for this month thus far in the live trading room, in the first 2 hours in the live trading room, while I'm trading about 8 different markets and answering questions from about 100 people, is $3,367.50 per contract, excluding commissions. You ought to be able to do better than that. Okay, and I mean that when I say that. Once you figure it out, you should be able to do better than that, because if you focused on one market, you probably would have done better than I did today. I mean, we were up $390 today per contract, but there was much more opportunity than that out there. All right, let's just get into it. All right, we didn't take any trades on the YM, we didn't take any trades on the ES, and we didn't take any trades on the NQ, which was really odd today. We didn't trade the NQ at all, but we did look at trades on all these markets. Okay. On the ES 10,000 contract, we had a bearish cross of the MA1 below the BBC, and it pulled back up to test the BBC right here. If you were trading the 10,000 contract the way that we do, then you would have entered at the BBC or within a tick of the BBC and clearly you would have gotten your profit out of that. On the 4-tick range charts, which is what we focused on this morning, there was ample opportunity there on the ES as well. Okay, there was, let me blow it up so you can see more of it. I don't have to keep scrolling around for you. Right in here, we had an opportunity right here on the close above this trend line, and you could have gotten long right in there, gotten long right in there, gotten long right in there, and gotten short over here. Okay, any one of those would have worked out. This one here, you would have gotten just a little bit of profit on it, maybe gotten stopped out at break even. This one would have been profitable, and profitable. Okay, that was the ES. Now the setups on the ES are pretty straightforward. On all the 4-tick range charts, they're all the same. You look for a bullish cross of the MA1 over the BBC, and you look for price to retrace down to the BBC. If it hits the BBC and you have divergence, you look for an up close and enter at the up close. If it does not have enough, if it's got too much momentum that it doesn't pull back to the BBC, you can draw a trend line like this and then trade the breakout above the trend line. Okay? If you have divergence to go with it, that's even better, because that gives you sort of a range to use when to expect the move to start coming back down. All right, I went over that several times in the live trading room this morning, and I do daily. All right, in each one of these, like right here, if you would have gotten long right here, you would have anticipated the green line's going to move up to the cycle, and it did. Then it pulled back. You would have anticipated the same thing right here. It actually didn't move up this time until it got over here. They kind of met over here. Over here you would have anticipated that it was going to go down, and it did. Over here you would have anticipated it moving up into the cycle. It didn't actually move up into the cycle, but there was still good price advancement there. And that was the ES. We didn't actually take any trades there, but we did show a few trades as they were setting up. All right, the same thing here on the YM. Today, we didn't take any trades on the YM, but there was plenty of opportunity to take trades on the YM. Okay, if I blow it up a little bit, you can see I didn't even realize the YM was this good this morning, for lack of a better word. You see right here at the open, price started to move up, and the way you would have traded this is close above the trend line. Okay, right in there. Once you hit the close above the trend line, you expect that the green line is going to work itself up into the cycle, and it does. Once it does that, you anticipate it's going to pull back again, and it did that, and then you anticipate it's going to go back to the cycle, which it did. Okay, so the spots for you to enter are here and here, and there was another spot right here where you could have entered because it didn't pull back far enough to get to the BBC. So the up close above that would have been right there. Not a lot of meat on that bone right there, but there was an opportunity. All right, and that was all within the first. Heck, that was all within the first 10 minutes. You know, it just goes on and on all day long. This stuff does. Okay, so you can trade it. This one would have been right here. The down close was right here for the move down, and then you could have grabbed it again right there. Down close for the move down, and again right here, this down close. All right, and I apparently looked at that one in the live trading room, and another one right there, and another one right there, and another one right there. It just happens over and over and over again. Today was a great day for trading, though. You know, on many days you're not going to have that much volatility, that much movement. Well, not many days, but on some days you're not going to have that much movement. Today was a great day for trading. It's kind of funny because I was thinking it's the day before a holiday long weekend, and I was thinking we did the open house, and I was thinking, well, maybe it's not a great day to do the open house because the markets may be sort of flat, but fortunately we have politicians that keep the markets running for us. This is the crude oil chart. Okay, I'll show you the trades that I took on crude. You can see the trades that I actually took are the trades that have the yellow arrows on them. The other ones are trades that set up that I either pointed out or that I missed and pointed out after the fact. But they were actual trade setups. All right. Now, when the market opened up, well, there was a bunch of movement pre-market right in here on the crude. I didn't get involved in any of that. Right after the market opened, it was coming off of this flat area right here. It opened and it started moving down. There was spots in here where you could have taken trades right in there. Now, without drawing trend lines on every single one, you could have taken a trade right in there. And another one right in here, all short trades. Shorted there, and shorted there. Then it pulled back up and went through the BBC. I did get long in here once it closed up above this trend line. Okay, I ended up taking like one tick on that, I think. And it went up, you know, from my one tick, it went up, I think, 10 or 12, 14 ticks, something like that. I don't know, but it retraced, it came down here. I shorted it off the BBC right here. I shorted the down close, and I took a little bit of profit on that one. It turned around again, moved up. There was an opportunity right here on the up close above this trend line to get in for that move up. I did get into the next one right here, and I took a little bit of profit on that. I missed this one and this one, but I did point them out in the live trading room. Then you got a bearish cross, and it moved down right here. There was an opportunity to get short in there. Once it pulled back a little bit like that, there was another opportunity to get short, and I did. I took some profit on that. And I believe that was the last trade that I took on this on the crude oil. Okay, but there were more opportunities right there and right there on the upside. When it flipped over, let's see, right in here on the downside, a short there and a short over here and a short right here. Another one right here. And without drawing the trend lines on there for you, I'm sorry, I can just draw the trend lines, but I don't want to take up too much time drawing the trend lines. The short right there on the down close below the trend line. And that brings us to where we are right now. Where we are right now is you draw a trend line from here down to the top. The divergence is backwards down here, so this isn't a great place to be looking to trade. You know, the best case scenario is when the green line is away from the cycle, because that gives you some sort of range of what to expect from the trade. Like in here, if you got long on the up close right here, what you would anticipate would be the green line working its way up into the cycle. Didn't I take this trade too? I thought I did. Got into that where it went up into the cycle, or maybe that was the Russell that I did that on. Anyway, you anticipate that that's what's going to happen. So you could get in over here and anticipate that it's going to get, I would say anticipate that it's going to get to the swing at least and probably go through it. All right, and that's a lot of what I covered in the live trading room this morning. But that was crude oil. We were up 24 ticks on crude. On gold, I'll show you the gold. We took 3 trades on gold today, I think. That one, and that one. All right, I pointed out this morning when I was just given the general instruction this morning how to look for the trades when you get the bullish cross, the bearish cross, the test of the BBC, the bullish divergence, all those sort of things. What we were looking for in here was just the up close above the trend line because it didn't pull back to the BBC. That gave some profit. I got in over here on the close above this trend line. I took 1 tick profit on that one. I got short over here on the down close below this trend line, and I stopped out. And I was at -7 ticks at that point. Then I missed a whole bunch of trades. I missed that one, and that one. I took this one, and that got me to break even. And I missed that, and that, and that, and that, and that, and that. And it's, everybody that was in there in the open house this morning, they understand why I missed the trades, I think. Because when I'm answering questions from everyone and I'm trading all these markets, while all these trades were going on over here, I was either answering questions or pointing something out on, might have been soybeans, it might have been the Russell. I might have been in a trade on the Russell or in a trade on crude oil or something like that at the time. Focused on a different market. Okay, but what I recommend to everyone is that you pick a market that you're comfortable with, you focus on that market, and your results will be better than mine. Okay, or they should be better than mine. You can see in here on the gold that there was a ton of opportunity. I ended up break even on the gold, but there was a ton of opportunity, and if I had been focused on the gold, it would have been fairly easy for me to be. It would have been fairly easy for me to be profitable on the gold. Okay, I'm going to bring the Russell over right now, and I'll show you the Russell. Again, on the Russell, a ton of opportunity in there that I didn't take. This was the one trade that I did take right here for 15 ticks profit. But I pointed this one out. I didn't take it. I pointed this one out, and I didn't take it. I pointed this one out, and this one out, and this one out, and that one out. And I finally took this one, and I missed that one, and that one, and that one. But again, I think I had gone through up to this point right here. I think I had gone through, and if you had taken every trade and only taken 10 ticks profit on every trade, including the one trade that would have stopped out, which was this one right here, would have stopped out, including that trade, you would have been up $680 a contract or something like that, I believe. I had come out to something like that. Some number like that. It's really straightforward. It's not hard to do. It's right there in front of you every single day. 1, 2. This one would have stopped out almost to the tick. But it was followed up by one that gave it right back. 3, 4, 5, 6, 7. And there were even more after that. 8, 9, 10. You would have been trading right up until now. You would have been up a lot if you would have taken 10 ticks on every trade. All right. But it's all the same thing from all the 4-tick range charts. You're using the same indicator set. You're using the same exact trade setup. Okay? No changes. That was the Russell. I'll bring over crude now. I didn't do crude yet, did I? I don't think I did. Yeah, I did. I did crude. I did do crude. I remember it now. It's all coming back to me. I didn't do soybeans. So I'll show you the soybeans, all right? there wasn't a lot of movement on soybeans this morning. There was an opportunity right here pre-market for the soybeans. The soybeans open up at 10:30 Eastern. There was an opportunity right here pre-market. There was a little shorting opportunity right here once the markets opened up, and then it turned around, gave a long opportunity right in here, and there was another one right in here, right in there. Okay, I didn't focus on the soybeans all that much this morning because they're a little bit choppy right in here. But Patrick, that's a good question. Do I use a fixed profit target? No, I don't actually. I usually get out of my trades by trailing my stop. Okay, I don't usually hit a profit target. I usually get out by trailing the stop. But that said, I do point out profit targets in areas where you should be looking for profit, or areas where you should be reducing your risk or trailing your stop. Looking at this right here, the way that this is setting up right now, what I would say is, if, let's just say you got long here, if you had an up close on this bar, you would get long. You have bullish divergence. Let's say it closes above the trend line that I'm going to draw right now. Okay? So let's say it closes above that trend line. You get long right here at 1426. I would say you have some divergence here on the slingshot. What you would anticipate is that the green line is going to turn up and work its way up into the cycle, just like this one did right here. Okay? And work its way up into the cycle. Depending on where you enter and where the green line is in relation to the cycle portion of the slingshot at that time would determine whether you expect it to get to or through the prior swing pivot. Okay, the way that it's looking right now, I would think that it would probably get up to about here. Okay, one tick below the prior swing pivot. You've got to see how it all comes together, but that's how I do it. It's all based on price action. If you have big swings, then you're going to have bigger targets. Something like this right here, where this was in the Globex, but still draw a trend line down like that. You would get in on the up close above the trend line right there, and you would stay in this particular case, because there's no room from here to the swing high. You would stay in until the green line gets up into the cycle. Okay, now at that point you don't have to get out, but that's what you would anticipate. You don't have to get out at that point though, but then you can trail your stop up right behind price. Okay, just trail your stop right behind the price. You can put it right behind the black line right here, step it right up behind the black line, and in that case you would get out right up here somewhere. Okay, probably down here is where you would get out. Okay, and I do try to show that in the live trading room. On the Russell trade that I did today, that's exactly what I did. I got in right here, and there was no room in between my entry and the swing high. Okay, but there was plenty of room for the green line to move up into the cycle. So I was in the trade while it moved all the way up into the cycle, and once it got into the cycle right here, then I moved my stop right up behind the price, and that's what got me out right up here. Okay, I had been trailing it back here just a little bit behind the MA1 and the black line, but once we hit the cycle here, because what you anticipate once it hits that is that it's going to pull back and give you divergence again like it did, and give you another opportunity and continue the trend like it did. Okay, that is what you do. All right. Whew. This is quite the recap, huh? All right. I think I'm going to wrap up the recap here. Does anybody have any questions? Anybody else have any more questions? I'd be happy to answer any questions, entertain any questions that anybody has right now. If you don't have any questions, then I'm going to wrap up the recap right here. That question that was just asked, though, that's it's recorded, so you guys can go over that again once this recap is posted on the website in a week or so. Write down the date. It's December 21st. All right, I'm going to wrap up the recap right now.